Good afternoon and welcome to the marketplace. Coming up in this bulletin, the Bank of Ghana Governor Dr. Johnson Isiama expresses concern about fresh risks to economy and inflation as members of the Monetary Policy Committee begin meeting to review developments in the economy.
We must be aware, colleagues, of the risks going forward, such as a resumption of exchange rate volatility. Crude oil price could increase, and the potential impact of some taxes to be imposed within the context of the mid-year budget review.
Meanwhile, International Monetary Fund, IMF, urges Bank of Ghana to maintain a tight policy stance as pressure mounts on central bank to cut deposit rates to ensure there is lending reduction.
The authorities have recently implemented changes to their Public Financial Management and Public Procurement Acts, and this helps improve the overall fiscal responsibility framework in Ghana.
We'll be engaging on economists on these developments, and government said to announce a new producer price for cocoa before August 7, 2025, as technical committee finalizes work for managers of the economy. We have these and more. My name is Winston Kaki. Now let's bring you an update on how the Ghana cedi is faring against major global currencies on the global market. Welcome back to the marketplace here on Joy News Channel. Now we'll be discussing consistently about the monetary policy rate, and today the central bank governor met with the initial conversation about what is likely to happen in the next 3 days. Joining me in studio is George Uafe to give us update on what happened this morning. George?
This is a three-day meeting, as you said earlier on. Basically, these members of the Monetary Policy Committee, they are meeting to review what has happened in the economy over the past 2 months. And basically, the argument is that whatever that they review as in the data doesn't warrant a policy rate being going up or going down or being kept unchanged at the current 28%. And opening this meeting, which is made up of the Monetary Policy Committee members, also some board members of the Bank of Ghana, and even some observers as well who are there to observe what is happening. The governor actually highlighted things that have happened over last month, the economy, the mid-year budget review, and also to mention that the fact that debt numbers are coming down. This actually maybe should bring us some excitement going forward. But the governor was worried about something, about the fact that they were seeing some blips with the exchange rate. If you even should stick to the Bank of Ghana rates, about 2 weeks ago, a week ago, we were doing somewhere around 10 Ghana cedis, 30 pesos. Now we're doing about 10 Ghana cedis, 40 pesos. And that should send some concerns to a lot of people out there. The governor was also worried about some of these tax measures and fees and charges that have been introduced in the mid-year budget review and how that will impact on inflation. Let's listen to the governor and expressing all these concerns at the meeting.
As we commence our deliberations, members of the MPC, the question before us is clear. The question is whether the current macroeconomic configuration warrants a recalibration of our monetary policy stance. With inflation expectations more firmly anchored, external buffers significantly strengthened, and public confidence improving, we must consider how best to support this recovery without compromising the hard-won gains in stability. We must be aware, colleagues, of the risks going forward, such as a resumption of exchange rate volatility, crude oil price could increase, and the potential impact of some taxes to be imposed within the context of the mid-year budget review, and of course, how these can affect pricing behavior. Colleagues, these can cause a shift in inflation expectations, and they are risks that we cannot take lightly at all. So I encourage staff and MPC members to maintain a strong focus on these forward-looking risks, these policy trade-offs, and the need to provide credible guidance to the market. Our mandate, colleagues, is clear, and that is to maintain price stability while enabling the conditions for inclusive and sustainable growth.
So the central bank governor highlighted key consideration as in things that may likely not necessarily erode the benefit that has been developed over the last 6 months. George, what does this basically mean for the policy rate going forward?
I mean, it's quite difficult if you were expecting a huge cut in the Monetary Policy Committee rate from the current 28% down significantly. You may have to start revising your note. Don't forget that the governor has made this argument about the fact that he would always be guided, or we should be guided when we make comments about the city, about the data. Now, the IMF is even actually going to make some comment, actually back in this. The argument is that, what is the data saying on liquidity? Does the data warrant a significant cut in the policy rate? From what the governor is saying, it appears that the committee will be more for the wait-and-see attitude. So those who are looking forward to the rate dropping by maybe 400 basis points or 500 basis points or about 5%, you have to start revising note, because the governor is worried about the impact of all these development on pricing behavior. Basically, inflation. Are these tax measures going to see inflation go up? But don't forget that we're also in the harvest season as well. So it appears that the governor, he has only one vote on the committee, to the other members as well. But if he has his own way, he thinks that we should be very cautious or measured in the way we go about with the policy rate, whether we cut it by a significant margin or just about maybe 2% and more of wait and see.
To Amina, who just walked into the bank lobby about to drop some money or deposit money into a bank account, or possibly being convinced by a banker to subscribe to a loan facility, what does this mean to her? So
you're looking at the policy rate here, and for those who want to play in the technical space, it's a more of a policy tool that gives us an indication about the direction of the economy. Also, that is the key lending rate that the Bank of Ghana will lend to the commercial bank. So if it's going up, it means that you're getting an indication that Bank of Ghana is trying to mop up liquidity in the system. If it's coming down, then you get the sense the Bank of Ghana wants to stimulate growth. They want to encourage borrowing. Basically, in the long term, or just breaking it down, depending on the decision that they will take on Wednesday, it would impact on the cost of lending to you as well. If you're already servicing a loan, there's a likelihood that the price will be reviewed upwards. If you're also servicing a loan, there's a likelihood that if they go down, that could impact on your loan, if depending that it was a variable rate. If it goes up, it could also impact on the cost of credit. And it gives you the signal for the economists to tell you that the outlook is not that good for us, even though the Minister of Finance has presented the budget to give us some indication that, well, the outlook is a little bit okay. So basically, for that person taking a loan, it could be more expensive for you servicing that loan, or it could also be more expensive for you if you should walk into a bank, Winston, and trying to borrow from a bank, depending on what decision that they will take on Wednesday on the policy rate.
Thank you very much, George Wiafe, for bringing us clarity to this conversation from the central bank governor. We'll certainly be breaking you down on this development in subsequent conversations. Meanwhile, the International Monetary Fund is urging the Bank of Ghana to maintain a tight policy stance despite recent pressures. Julie Kazok is Director of Communications at the IMF and has been speaking at a news conference in USA.
7th, the IMF's executive board completed the 4th review of Ghana's ECF arrangement. And after board approval, Ghana received about $367 million US, bringing total support to around $2.3 billion US since May 2023. With respect to the budget, here I can say that the IMF has welcomed the government's corrective actions, including a strong 2025 budget and an audit of payables to quantify and address the pre-election fiscal slippages. The authorities have recently implemented changes to their public financial management and public procurement acts, and this helps improve the overall fiscal responsibility framework in Ghana. And the authorities have also adopted a strategy to address issues in the energy sector. I can add that the mid-year budget review is fully in line with parameters and objectives of the IMF supported program.
Now, away from the MPC, government is expected to announce a new producer price for cocoa in the coming days. We are learning that the announcement will be made before August 7, 2025, which is next Thursday. Judge Biafre has more in this development.
Government is now going ahead to announce the new price after the technical committee finalizes work on reviewing all the factors and scenarios that goes into the pricing of the bean for farmers in Ghana here. We understand that the new price should have been set earlier following the end of the crop season on July 24, 2025. However, the Finance Minister, Dr. Tuforson, who was expected to do the announcement at that time, was working on the mid-year budget review. The Finance Minister, Dr. Tuforson, will make the set announcement in the coming days about the new prices for cocoa beans in Ghana here. Government has already promised that it would give cocoa farmers in Ghana at least 70% of the world market price of cocoa, which is currently selling at $8,329 a ton on the international market. Chief Executive of Cocoa Board, Dr. Randy Abe, earlier raised concerns about the cedi's sharp appreciation and the impact on setting new prices when it comes to the dollar cedi value and how they should offer cocoa farmers. The producer price is currently pegged at 3,100 per 64 kilo bag or 49,600 per ton.
Now let's get onto the phone lines and speak to economist Professor Patrick Isumin on these developments. First, are you also worried the fresh concerns that the governor is expressing on the economy?
Good afternoon, and good afternoon to viewers. Thanks for having me. So, I think that the governor's concerns are valid, and it's not necessarily fresh concerns as far as I'm concerned. I think that while we've made substantial progress on both the fiscal and the monetary side, we have to understand that the risks still remain and the challenges are still there. So on the basis of that, I think some level of caution is needed. Of course, if you look at the recent numbers, where growth is headed and where inflation is headed, you obviously think that the balance is tilted really toward the direction of an easing of the policy rate. But we have to understand that regardless of the substantial disinflation we are seeing, we are still not in our target band. The target band is 6 to 10. And we are currently doing 13 plus. So I think the government's caution absolutely all that.
Great. Prof, do you get the sense that a significantly reduction or probably significant reduction in the policy rate we are looking for it to will we suffer subsequently?
I don't think that we will see that significant reduction that people have been expecting. Now, outside of the concerns that the government is doing, I'm sure you also heard, we just played the voice of the IMF. And they have been adamant that monetary policy should be kept tight. Of course, even if you cut it by, say, 100 basis points, it's still relatively tight. But to see a dramatic swing like the 400 basis points that some people are expecting, I think it's a little bit too much. you have to recall that it was only March that the MPC decided to raise the rate. So you can't say between March and now, all the percents have turned out so dramatically that you could see such a dramatic reduction in the policy rate.
Prof, what will be your advice to the Monetary Policy Committee probably today?
Well, if I was one of the members, I would vote to keep the rate unchanged. I think while the risk to growth appears subsided and the risk to inflation is also on the lower side, I think we have to wait until the inflation is firmly entrenched in the medium-term target, especially knowing that there are some upside risks coming. If you look at the government budget that was presented, the amount that the government has programmed to spend in the second half is way more than the program spent in the first half. So that thing might bring some pressure. And then we don't know what will happen at the next review of at the next quarterly review of the GDP. In any case, we saw a recent increase. So if you put all of that, these increments take some time to happen. It takes some time to begin to see this pass-through effect fully felt in the economy. So on the basis of that, I think to wait for another couple of months is not such a terrible idea. So I will hope that we keep the rate until.
Prof, let's move slightly away from the MPC and now talk a little bit about cocoa. The government is optimistic of increasing prices very soon, hopefully the 7th of August. From what you said, is it a reasonable decision?
Well, I don't know if there's a specific percentage that, but again, if you refer to the IMF document, the review document that was reviewed, the suggestion is that the price should be kept around 70% of the international market. And we haven't been doing that recently. So I think, given the challenges that the price is, I think if prices are high, as it's been in recent times, I think it is good to pass on that part of that benefit to the farmers. But at the same time, you have to understand that the cedi as it is now is very different from the cedi as it was at the last season. So I think that's the balance. Overall, if you are supposed to give the farmer 70% of the world price, then I think it is an improvement.
Prof, do you believe this payment could have an impact on inflation eventually? Now, I think the way you look at it is, if you are paying more for a good that is there, and if this extra payment encourages farmers to produce more, that shouldn't be inflationary. It is when you are paying more money and you are not generating additional goods and services. And to the extent that this is an incentive to encourage the farmers to produce more, I don't think that it is inflationary. Prof, thank you very much. I appreciate your time here on the marketplace. Now, moving on, government recorded a remarkable 264% oversubscription of Treasury Bills a day after the finance minister presented the mid-year budget, to review in Parliament. Bank of Ghana data showed that the interest rate dropped further to 10.8%. Here is a DEX report.
For the short-term instrument reached its all-time high as investors submitted bids worth 28.096 billion Ghana cedis. The government accepted 15.160 billion Ghana cedis as against the target of 7.701 billion Ghana cedis. About 13 billion Ghana cedis of the bids tendered, representing about 47.8%, came from the 91-day bill. The uptake was 5.078 billion Ghana cedis. A little over 8.719 billion Ghana cedis was also tendered for the 182-day bill. However, 1.723 billion Ghana cedis was accepted. For the 364-day bill, 5.941 billion Ghana cedis was tendered. About 4.3 billion Ghana cedis was accepted. Meanwhile, interest rate tumbled significantly across the yield curve. The yield on the 91-day bill went down by 289 basis points to 10.83%. That of the 182-day bill also fell to 13.22% from 14.61% a year ago. The yield on the 364-day bill also declined by 43 basis points to 14.30%.
Ghana's insurance industry is pushing for a deeper public engagement as it eyes a projected gross premium of 2.73 billion Ghana cedis in 2025. The call comes at the launch of the 2025 Insurance Fair, a major stakeholder event aimed at boosting trust and promoting the role of insurance in both formal and informal sectors.
Despite steady progress in claim payment, many Ghanaians still lack trust in the system. At the fair, Assistant Marketing Manager at Millennium Insurance, Christine Mensah, challenged the perception and encouraged citizens to seek out the facts for themselves. She emphasized that transparency and education are key to building public confidence and expanding coverage across the country.
If our listeners can go through the Ghana Insurance Commission website, when they read, they will know the number of claims that has been paid for the year. A lot of claims has been paid. So the perception about insurance companies not paying claims is not true, excuse me to say. We pay claims.
Sales manager at Enterprise Life Assurance, Christiana Sabia Manko, highlighted how insurance serves as a vital buffer for families when tragedy strikes.
For a Ghanaian to have life insurance because you don't know what the future holds. We are in a very volatile economy in the sense that today you may be employed, tomorrow you may not be employed. You are in a family. Today your breadwinner will be alive, tomorrow your breadwinner will not be alive. Even when your breadwinner is alive, or the person you are alive, you are doing a bit of work and then you're getting a bit of money coming in. The moment that part of your life is truncated or you lose that job, what happens to you? The little resources that you are able to save is what you have to live on. And we are saying get a life insurance, and it is at that point when you don't have the finances to support all these things, is when the life insurance comes in and it becomes a buffer for you.
That's all for business here on the marketplace. My name is Winston Taki. For more business update, visit myjoyonline.com, and you can see on our Facebook decisions taken must support ongoing economic recovery. That is according to Dr. Isiama, who is telling the MPC members government will announce a new producer price for cocoa before August 7, 2025. We have more and exciting articles there on myjoyonline.com/business. Thanks for watching. Have a good business day. Bye-bye.